Good morning, good afternoon, good evening. This is Kirk Newcombe and Ryan Crago here.
Hey, everybody.
Episode 2 of Search United. We are here to introduce Ryan to the world, although he's been around the block before meeting us. We're going to talk a little bit about who he is as a person. He's an investor, small business buyer, and he's excited to kind of step into somebody's current operation and help them find their way to the beach or to the golf course. We're going to talk a little bit about his professional experience, maybe talk a little bit about structuring as well. So if you're a small business owner and you're trying to figure out, how do I sell my business? What are the things I need to know? This Ryan guy has put an offer in front of me. Ultimately, how does it help me as a business owner? So we'll talk a bit about that, and yeah, hopefully have a little bit of fun. Hey, listen, this is going to happen when you're recording from home. So listen, Ryan, I'm really glad you're here. I'm excited to meet you. You and I met initially. I was still working out of an office in Brooklyn, in downtown Brooklyn. Gosh, what am I saying? Queens. And you were contemplating a search. You had just finished your MBA. And I really enjoyed the conversation. I think we became fast friends because we both studied overseas in Europe. Yep. And I'm super excited to see you searching, and it's been nice commiserating with you. Always. And always. And yeah, and so I'm happy to have you here. So to kick things off, I think it's really important for everybody to get to know you. So I think you got an awesome story. Can you just like let us know who's Ryan? What's your story, man?
Yeah, for sure. No, and Kirk, you really appreciate you bringing me on here. Like you mentioned, we've kind of gone through this journey a little bit together here for the last couple of years, and you've been a great person to be able to bounce stuff off of. But yeah, happy to share more about me.
You had to say that on this show, though. You realize that?
Well, you want to get invited back, right?
That's it.
A big show like this, you want to get invited back.
Very big.
But yeah, so a little more about my background history. I think it was about 5.5 years old when my dad, he left a job in the corporate world, and him and my mom embarked off on this journey, called entrepreneurship. And at the time, my understanding of it was, it's a big word that's hard to spell, and my dad was really excited when I figured out how to write that on the chalkboard. But for me, it really kind of came. This move for him really kind of came to define my life. I was there for the ups and downs of that business journey. And, for me, it really kind of came to shape how I think about career, how I think about responsibility, how I think about leadership, and even more so how I think about impact. So, they were running a small consumer products distribution company. And, so for me, what that meant was I was packing, unpacking, repacking product, making sure that people got, what they had ordered. And, through that journey, one of the really unique things that I got to see was, their business started out here and their business grew to here. And, when you read the books about business, it's like everybody talks about all the great things and how smart they are and how they figured everything out. But what you miss is the journey. And I got to live through that with my parents. And for me, one of the most things that really struck me was being able to see new team members come in, and they're pretty raw. There's some talent there, but it's raw talent. And then as the business grew, seeing how my parents had to grow, seeing how they had to stretch, but also that focus on building their people and really the impact that it had not only on their customers, but even more so on their team, and being able to see the leaders that their team grew into, for me, kind of planted this seed inside of me that said, okay, I want that same experience. I want to be building that organization and growing myself and growing the people within it. And it kind of started that little fire that had, maybe it initially was just kind of smoldering, but it's grown over the years with, kind of my whole career path to date has been, how do I set myself up where I've got the skill sets, the relationships, the abilities, the emotional intelligence to be able to take on the responsibility of running a business and being able to do the right thing for customers, employees, and the whole team.
That's cool. So paint me a picture here. I'm imagining, this is what I'm imagining. So are we talking like a big warehouse full of like toiletries, and you got 6-year-old Ryan running around lifting things? Like help me visualize this.
Yeah, no, for sure. So we're starting out in the garage. So it's
Okay.
6-year-old Ryan in the garage, and it's toiletries, it's toothpaste, it's shampoo, it's hand soap, it's consumable items, bags of chips, and then people in the organization coming, and you're handing out their specific orders. And then as the business grows, that becomes more and more of a refined operation.
Sure.
So half the time was there, but there was a huge focus on personal development in that organization, because what my parents saw was, and it's I've seen reflected throughout kind of my career, is leadership isn't the CEO. Leadership's not it doesn't stop at the owner. It comes all the way through, and the only way to really have that happen effectively is to focus on developing your team. And kind of building the right culture. And so, half of my time was helping them organize the books that they were putting together for their team to read, that they were going to discuss later, the different tapes that they had set up for them. Helping.
What do you mean by tapes? Sorry to interrupt.
So this was, a long time ago. And so the tape was just a recording of somebody speaking on a subject. So it's
it's part of like a learning and development program.
Yeah, it's part of the learning and development program. Yeah.
You're way past garage stage here, right?
Yeah.
How many employees are we at this stage, and how old are you? This is the 80s, right?
This is the 80s, early
90s.
It probably started where they were like 5, and it probably got up to hundreds.
Okay. So you were part of that, and
Yeah.
and the tapes.
And the tapes.
That's awesome. Big messages for you, right? Like you got to see it firsthand. You watched your parents kind of go and grow this business. You learned what it means to be great leaders, starting from the top and really imbuing that like culture, right? And leading by example from the top down. I mean, I feel exactly the same way. It gets me very excited. And these are the things I love talking about as well. So this is perfect. So Ryan, listen, you started New Endurance Capital recently. You've been at this a little while, and a hypothetical scenario that happens to you every day. You jump on the phone with a business owner who's been running their company for 30 years. They've had these calls before, right? But you're different. How do you explain to them what you're trying to accomplish?
Yeah, for sure. I mean, my goal here is to buy one business, move to wherever that company's located with myself and my family, and spend the next season of my life growing that company. So, really what I'm trying to share with them is my focus is 100% on buying a great business. And for that to work, I'm looking for kind of a win-win situation. So what I'm offering really is the opportunity for a current business owner to either step away or move into a maybe more focused role. So if that's something that you're looking for, then let's continue the conversation here and see if there's kind of goal alignment between what we're both trying to accomplish. My goal, like I was saying, is to find a great business, and as you know, there's different definitions of what that means. But for me, there's a financial threshold that's got to be there, but that's the least important thing. I'm looking for a company with a great culture that I feel, with my background, I can have a significant impact on the people in the business and the people that the business is servicing for the long term. Something where I know I can maintain that quality of service that entrepreneur has put their blood, sweat, and tears into developing, creating, and really they're, I mean, what's the right word? It's like, it's they've given this commitment to their customers. It's like, this is who I am. This is what you're going to get when you come to my company.
Yeah.
And, I got to come in and be able to show that I can do the same thing there. And that's the goal. That's
the goal. Okay. So they put you on the spot, and that's where you're coming from. It sounds really romantic. And I'm a romantic as well, right? Like I feel similarly about sort of what I'm hoping to do. What makes you think you can actually get this done?
That's a good question. And, we touched on it a little bit earlier, talking about growing up, working with my family's business. And so I think that gave me a really solid foundation to understand, what are kind of the trials and tribulations, or the challenges, maybe is a better way to put it, that you're going to face as you're growing a business. And, the burden of responsibility that comes with, you've made a commitment to your customers, but also at the same time, there's families that are depending on, you being open every day and you continuing to provide great service so that your employees have somewhere to work. So I think just an understanding, one, of what I'm signing up for from that perspective.
Yeah.
And then from there, I think it's really been, kind of the experiences that I've had in my career to date. So, initially starting out in kind of the finance M&A world gave me a really solid foundation in kind of reading the health of a business.
Okay.
Being able to continually monitor, where are we at? Are we in a sustainable position? The last thing I want to be doing is buying a business or putting a business at risk, or putting a business at risk from a financial standpoint, because I know how many people depend on that business, both inside and outside of it. And then kind of from there, career-wise, I ended up helping some friends start a small financial consulting firm. And so, we took that from, it was about 3 employees when I joined, and now it's over 50. And so kind of similar to what happened with my parents' business, I got to be part of that journey, although, on this time I was in a different role. I had a different seat, instead of being, kind of being told what to do by your parents all day, and, them controlling your summer, as you brought it up previously. Here I was an integral part of the team. I was like the number 3 guy. And so I really understand a business with 3 people has these resources,
yes,
and these needs, and a business at 50 has these resources and these needs, and it's completely different. And as that company grows, there's different aspects that need to be focused on. I think there's people talk about like that quadrant, like what's urgent, but not necessarily important. Yeah. And so kind of that things shift as the business grows, and having lived it from multiple angles, like we're talking about, it allows you to anticipate what you're going to need to be addressing. And then that kind of final question is, well, do you actually have the hard skills to do it? And as part of that financial consulting firm, we were also doing direct investments.
Okay.
And actually our first investment was a dental practice business. So we bought 3 dental practices. I think they were doing a little more than $1 million in revenue. And the goal was to grow that company to kind of a more sustainable level, 30 practices or so.
Okay.
And for me, that was a great opportunity because I actually got to jump into the business. So I became the VP of M&A and operations there, and a part owner. So working directly with the CEO on, coming up with the strategy of how are we going to grow this business responsibly, but then also execute on that strategy. So, the goal this year is to grow 100%. Okay, well, what does that actually mean? Going out and being kind of the tip of the spear, if you will, with identifying, potential acquisition targets, determining are they going to be a good fit for the company. And once that acquisition happens, then realizing that's actually when the real work happens. That's when the integration, and everybody talks about culture, and it's kind of this ambiguous thing until you're in it, and you realize that the company we just bought does things totally different than our business. And it's not just that they do and feel things differently, it's that they have different systems as well.
Okay.
And so they're really having to go in and focus on two things: on the people side, getting everybody pointed in the same direction, but at the same time setting up the back office with processes, procedures, technology, so that as we grow and scale, it happens efficiently, and most importantly, the quality of care stays the same or even improves because of what you've been able to gain from kind of economies of scale there.
I think it touches on this interesting question that I get a lot when business owners speak to me, is like, how do you feel that you have the skill sets or the abilities to be able to get smart on my industry, right? I've been in it for 30 years, and it's a totally valid question. And I think it's a feather in your cap, especially for you when you walk into these conversations. It's like, well, I'm not a dentist. I don't have a background in dentistry, but have successfully gone out and actually executed in what I would argue are sizable but relatively small businesses and intimate practices. Can you maybe elaborate a little bit on how you thought about the transition of say that the medical responsibility, right? $1 million a year practice, you might have, I think, right, one sort of dentist in that practice. How do you think about that, right? In the lens of also preserving culture and sustainable processes.
Yeah, and it's a hard feeling when you come into a company or an organization, and because of professional certification, education, skill set, you actually can't perform the job or the role that is what's bringing in the money for the business, that the service, and you have to think about your role completely differently, and maybe it's how you should kind of always be thinking about your role as a leader, in the sense of my job is to empower the people on my team, move whatever roadblocks are out of their way, make sure the people are in the right seats, or that if nobody's in a seat, we get that seat filled. Mm-hmm. But I guess kind of the way that I think about it is coming back to the culture and alignment, and kind of first off, everybody understanding kind of the why are we here, and letting the clinical side know that kind of the number one goal is clinical excellence, is patient outcome. Okay. So letting everybody on the team know that any decision that you make, that should be the first thing that you consider. Like we talked about when we're evaluating a company, the financials are important, but they're not the most important. And so, like when you're working with a doctor, you got to let them know that you need to make the right clinical choice. And we're going to back you in that, even if it's going to cost us a little bit more money because of it.
Okay.
And so I think that was a hurdle that we had to get over with our dentists, to let them know that, we're not here to cut corners. We're here because we want to have the best product, mm-hmm. best service, and the patient comes first in our mind. And then beneath that, it needs to be a sustainable business model, but we have to develop that level of trust first, that we're going to let them be the clinician. And then from there, it really is understanding kind of what are their pain points, and then trying to set up the processes, the back office processes, to alleviate those and increase the efficiency, at the same time of being kind of like we're talking about with responsible growth. So if we want to continue growing this, we're going to need to change some of the processes and some of the ways that we do things to be able to achieve that in a way that gives us confidence that the business is going to be in a place where it'll be able to provide for everybody.
Okay, interesting. And I think that's always it's an interesting line to toe, your final point about making change, right? And how do you execute on that? Because I want to believe, right, that the business that I eventually buy, and probably the one you buy, they have a great sort of system set up, and there's a flywheel and it's spinning. But I also know, and you and I have talked about this in the past, is that nothing's perfect, and that's okay, right? And so ultimately, like, we just set our order of priorities. In your case, right, it's going to be about clinical excellence, which I think translates to any other industry when it comes to basically prioritizing customers, right, your employees, and I think for you especially is just about being a high integrity business owner and operator. So that's special, and I appreciate that, and I think yeah, I mean, if you've done it in a healthcare setting, I feel like the level of expectation there, right, is so high that I just can't imagine how you can translate that into other industries, and I assume it's highly applicable. So
yeah, I think one thing that I know both you and I think about is the business that we're looking for a great business. We're not looking for a business that's broken or one that needs to be turned around. So when I think about acquiring a company and coming in that leadership role, I'm not thinking that I know how to run it better than the owner. Not thinking that. My guess is I'm going to end up in an industry where I don't necessarily have direct operating experience.
Yeah.
I've got a handful of experiences across a myriad of industries that have taught me really important lessons that I know I'm going to be able to kind of use as a lens to evaluate a company and help steward it in the right direction. But I don't hold this, I'm a genius and I'm smarter than the entrepreneur who's grown that company for 30 years. Like, there's no way I can know it better than them. There's no way I'm going to be able to if I was buying your business, Kirk, to run your business like you did it. And so how I think about it is, I'm going to come in and I'm not really the goal isn't to change anything. The goal is to watch and understand who's doing what, why they're doing it, why the process is set up that way. And then, like we were talking about, say, here's the goal, here's what we're trying to get. Is there stuff in the back office that needs to be optimized so that we can get there in a sustainable, responsible way? Is there a seat on the team that we don't have because either the goal wasn't to go here initially, or the business wasn't big enough yet to need that? And it really, I'm not trying to fix anything. I'm trying to take what we've got and do more of it. And sometimes there'll be some, like we're saying, maybe additional technology that's going to be helpful, or additional processy, or additional role that we need to bring in. Like, that's kind of how more I'm thinking about this. It's like the boat's going, 40 miles an hour and it's headed this way, but where we really want to get is here. So, like, just
a little course correction.
Yeah, or maybe it's not even a course correction. Maybe it's just we need another airbag, or
we need, you know what it is? I like the analogy. You need somebody else rowing on the other side.
Yeah.
Right? And I think that's it. And I think it highlights it's related, but also sort of for you, it doesn't mean that you're coming in and doing cost cutting, right? It's retaining an existing team and building off of that, right? If I'm not mistaken.
100%. I mean, the business I'm looking for is a business that has a great team, that's doing things right, where the customers are coming back already. Yep. So me coming in and cutting the people that the customers have the relationship with, like, that's not the plan.
No.
I'm looking for someone that already has a solid team. It's exactly what we're saying. It's just, does it need to be augmented because of where we're headed now?
Okay. I really love those conversations. Some of the best conversations I've had or most enjoyable is what I mean, is I'm deep in a discussion with somebody. We've been getting to know each other really well personally. And I say somebody, a business owner,
Yep.
and I get to ask like really granular operational questions. Who is this person? What is their day-to-day like? Oh, they do 50% of their day dedicated to this. And I identify that there are, yes, great processes in place, but I also know that there's more that we can do to help them even to be better at their job and more efficient and enjoy what they do.
There, we kind of have in the world of buying businesses, you kind of have a toolkit that you can draw from when you think about things like, kind of the role of the seller going forward, the structuring of the transaction. I think in the newspapers, you always hear about the company was valued at $100 million,
Yep.
but you don't always hear about what that 100 is made up of.
Okay.
And, those are some really interesting areas where, as a business owner, is kind of examining what does a sale of my company look like and mean to me. There's some deeper layers to go into. Are you trying to completely exit from the business? Do you still want a role? Do you want to be out of the business, but would you like to be helpful from a high level strategy or from a relationship perspective? So there's an area to dig into of kind of the involvement that the owner wants post sale.
Mm-hmm.
What's their ideal world, and working to understand for that business, what could we make work from our side that would line up well with their goals for that piece.
Okay.
And then there's kind of a second side of the conversation, which is around, you've agreed on a valuation. But then it's, from a risk perspective for us, how do we get comfortable with taking over a business that, previously we have no association with? And then from the owner side, from a, tax optimization perspective,
Mm-hmm.
from a, maybe they want a second bite of the apple here, where, they positioned the company to be set up to grow, really strongly for, the next 10, 15, 20 years. And they want a way to participate in that. So then we're talking about, maybe it makes sense for them to roll some equity into the business where, from our perspective, that really reflects their belief in the strength of the company. And
Mm-hmm.
from their perspective, it gives them the opportunity not only to take chips off the table now, where they can, use that to kind of focus on it and kind of do whatever it is they were hoping kind of in that next phase of their life, but then also still be a part of this amazing company that they've created and gotten to where it is today, and get to participate and help in the future growth of the company.
Okay.
Does that make sense?
I think it does. And I think let's deep dive a little bit, because what I'm hearing is from you, your starting point for a lot of this is going to be their goals ultimately, right? And it's a lot of like deep questions, and that's going to help dictate the outcomes. But also maybe it's also the gate to deciding whether it makes sense for you to go further into the conversation or not. It's almost like it's the first thing. Are we a good fit? Does it make sense? And then you're going to transition to the next topic, which revolves around that structuring side of things. Let's get you to put your professor hat on a little bit, Ryan. Okay.
I wish I had like something I could just pull over from here, but they're in the other room.
Somebody hands it in from the screener. I hand it to you. We could do that. So get a little academic. I think like what is an equity role? You mentioned that, right? So if somebody rolls equity in a deal, for somebody who's never sort of done a transaction, sold their business before, what does that mean to them?
Yeah, simply it means you're going to maintain some ownership in the company.
Okay.
And when I think about that, I normally think somewhere between 10, 15%, maybe a little higher.
Mm-hmm.
But it kind of depends on the goals and kind of the other parts of the negotiation of the structure. But as we had mentioned before, it's a way to continue to participate in the growth of the business, and be able to receive, kind of that an additional. Well, I guess it's two things. It's an additional payout down the line.
Yeah.
But at the same time, it's a continued vested interest in what you've created. And from my perspective, it shows me that, okay, I can still come to you for help as I'm continuing to steward this business forward.
Okay, that's neat. Now, second topic, right? What might be like a deferred payment or a seller note. How does that? What is it, right? And how does it compare to an equity roll? I think in some cases I found folks have a hard time differentiating between the two.
Gotcha. Yeah, and that's the fun of the structure conversation, because a lot of it can get muddled together, and a lot of people use different words for things. So I can imagine. Yeah. So when somebody decides to take a seller note, I think of it as them kind of agreeing to accept debt.
Okay.
So basically what they're saying is, let's say the seller note was for $10 million. So of the purchase price, $10 million would go into a seller note, and it would receive interest that would be paid on it each year. And then there would be a schedule for when that note was paid back.
Okay. Similar to my mortgage or my auto loan or something along those lines, any amortized kind of situation.
Exactly. So it's something where it all could be paid back in year 5. It's been accruing interest every year. And usually you're not paying any taxes on that up front.
Okay.
Whereas, with cash that you're receiving, on the day of the sale, you're going to be taxed on that year.
Okay. So that's a big distinction, I think, for anybody. So let's present two scenarios. You sell 100% of your company, or there's an alternate scenario where you are selling 100% of your company, but a portion of that structure is going to be in a seller note. In scenario A, you're going to pay taxes, at exit of the whole business. In scenario B, you're going to pay taxes, but only on the portion of the purchase price that is transmitted, that is paid to you in cash on the day you close. The rest of that is going to be deferred over time. And we are not tax advisors, just as a disclaimer. We are not tax advisors, but you should always ask your accountant about this sort of stuff, because your unique life scenario or situation can actually help you. And I'm familiar with businesses, really great businesses that I would have loved to have bought, and they, somebody structured a deferred payment plan over many years that helped them focus on their health issues and bring in somebody who's really capable to run the business. And everybody, it was a really symbiotic, a win-win for everybody, which is kind of neat. So I'm gonna also sort of play the compare and contrast game on the seller note versus the equity side of things. You told us that the seller note has like an interest rate on it, right? That interest rate is sort of a fixed amount that somebody's going to make over the life of that seller note, hypothetical 5 years. Okay. What's the difference between the payout that a business owner might have in that scenario versus one where they hold equity and they roll equity in the company? Yeah.
So if, let's say they're rolling 20%, so they sell you 80% of the business, they're retaining 20%. So as the business grows, let's say we're 5 years down the line, and if there's excess capital that year to distribute, they would receive, because they own 20% of the business, they'd receive 20% of that capital that year.
Okay.
And in any subsequent year where money is returned to the investors, the same thing would happen. So, it's not limited by the term of the seller note, because it isn't a seller note. It's, you own that percent of the business until there's a situation where potentially the business is sold. And then if that happened, you would receive 20% of the proceeds of that sale of a, hopefully much larger company than you initially sold.
Okay. So this is a way to come along for the ride, to participate with Ryan and Ryan's investors, and to, like you say, take a second bite of the apple, right?
Huh.
Okay. I've been working personally on how do I continue to, like, in situations like this, teach somebody about the value that can be created for them in that process. And there's some really great stories in our community. The beauty of the outcome for the business owner was that they actually made more money on the second sale of the business, right, 10 years down the line, when they rolled equity, than they did in the first sale. And they got to enjoy their sort of the next season of their lives, while you stepped in the next season of yours to continue growing it. And it was part of sort of their overall strategy of remaining invested in the industry and participating.
Yeah, and like you talked about it really comes down to both sides understanding what are people's goals. Okay, you want to sell your business, but is that because you want to go live on an island, a desert island, or maybe a resort-filled desert island for the rest of your life? Or do you have some sort of charitable cause you're trying to put all your energy into and need a certain amount of money now, but then it could be nice to have another chunk later? Do you, with the seller note, is it something where you need to have certainty kind of on what that's going to be?
Mm-hmm.
And this is where, like, the conversation kind of gets, it's always fun, but it can get really fun because it's just
not like, everybody would say structuring is super fun, by the way.
Well, but it's the vehicle that gets you the lifestyle that you want. Okay. And the better you understand what you want and can communicate that with me as we're having the conversation, the more we can really dig into how do we set this up so it's the best outcome for everybody.
Okay, I like that. So you're a stakeholder in this. The business owner is a stakeholder in this. Who are the other stakeholders in a transaction, right? When you're trying to get something like this done and help the business owner achieve their ideal outcome, I guess.
Yeah, I'm not sure if this is the direction that you're going here, but probably the most important person on the owner's side is going to be if there's a spouse.
Okay.
Or family that's involved in the transaction, and making sure that, from my side, it's always making sure that the spouse knows that this is something that's being talked about.
Okay.
And getting to know them as well, because many times the spouse is a huge part of the business, or just of kind of the culture that's been created there. And thinking through an exit, it's not just about how it affects one person on the other side. It's about how it affects them, their spouse. It could affect their family, potentially how is it going to affect the employees. And I think the better that the business owner understands that, the more frank of a conversation that we can have on that side. On my side, obviously there's my family as well.
Sure.
But I guess the other group is the amazing entrepreneurs, CEOs, and investors that I've partnered with here.
Okay.
And as I was thinking about who do I want to work with on this journey, that's something that I reflected a lot on. And for me, it was really all about, let me find people that I respect, that have high integrity, that I know have been down this path before, some of them multiple times, that have acquired businesses, stepped in themselves and run them, grown them responsibly, and had positive outcomes for those companies. And my thought was, if I can find people that have done that are interested in mentoring me and also providing guidance to the company once it's acquired, that sounded like a win-win for my side.
Yeah. And a great leading indicator, but maybe I'm tooting my own horn.
Yeah, and so from that perspective, I'm looking for a business where my skill set, I'm confident I can continue to grow that company responsibly for the long term.
Mm-hmm.
But at the same time, I also have this group of amazing people that I've partnered with that I know we're going to be able to reach out to and rely on support on if we're facing some decision that I haven't been through before, or potentially if the seller is still involved, they haven't been through before. And so we have this bank of, that's the wrong way to put it, but there's like bank wealth of knowledge that we're going to be able to actively draw from, and relationships as well. So if we're looking to raise debt, if we're looking to expand into maybe an additional one industry over, these partners, they're going to have relationships that we're going to be able to leverage there.
Okay, very neat. So I'm just getting to know you. I'm again this business owner, right? I've been running my company for 30 years. I don't know you from Adam, and you talk about these investors, and it sounds all well and good. We start having a conversation about structure. You propose something where there's either a note or an earn out, and I'm starting to think like, and this has happened to me, right? It's like, well, why would you propose this? Do you not have enough money to get the transaction done? I think it's a very valid question, right? But what I'd love for you to do is maybe to help like reframe, sort of how to think about that, because it isn't really about a lack of funds. It's about other things. So maybe, can you speak to that?
Yeah, I mean, we always talk about it as the business owner not knowing us.
Mm-hmm.
But it happens. It's the same way. We don't necessarily know the business owner or the business.
Good point.
And like I said, I'm looking for the highest integrity person that I can find to transact with.
Yeah.
And my commitment is that I'm going to act that same way with them. But when you start involving a bank, if there's going to be a loan, these investors, my partners who are putting in significant amount of money here, it's hard for them to completely agree to do something based on my personal feelings about the relationship that I've developed with the business owner.
Okay.
And from the beginning, my goal is to develop trust with them and try to be as upfront as possible. And one way that we use the structure is as a leading indicator on who knows the most about the business.
Okay.
The business owner. And if they're willing to roll equity in the business, if they're willing to accept a seller note, that shows us that they believe in the future prospects of this business, that it's not a situation where somebody has kind of dressed up the company so it looks great,
mm-hmm.
but you get in and start operating and the wheels start falling off. And so there's part of it where it's a show of faith in the continued excellence of your business.
Mm-hmm.
And there's the other part of it, which we kind of touched on, is what's the right structure for the situation. And so part of it is the role that the owner wants to play going forward, if they want to participate in the future growth of the business. Some of it is also, and I struggle with how to think about this or how to discuss this, but it's a real thing. The math kind of has to work on our side too.
Yeah. And
using some responsible, prudent debt allows us to kind of hit the thresholds that kind of I've committed to my investors that we're looking for from an opportunity perspective. I mean, what are your thoughts there? How else do you think about that?
I think you raise a really good point. And I think one of the challenges that we have in our role, and that business owners, when it comes to building that trust and getting to close, right, to the finish line with a business owner, is the expectations that maybe have been set by the folks that are out there talking about valuation, who are also in the industry and yes, experts, but valuation can be quite subjective. And so a lot of times it's tough to sort of wrap your head around the idea that if you are going to pay all cash for a business, the obligations that you, Ryan, have made to your investors, if you are going to pay all cash for a business and there's no involvement of a third party like a lender, right, that it only allows you or affords you the opportunity to pay a certain price for that business. And that price is definitely lower than where sort of like all the chatter is in terms of like people's expectations from a value perspective. And I totally understand business owners want to get maximum value for their business. And I am interested in paying a fair price for their company. And typically a prudent use of debt is going to be a component of what we do. Somebody should assume that that's going to be the case. And those folks are stakeholders, interestingly enough. We can talk about that. But the use of that debt or the use of structure allows us to meet somebody, a business owner, at the valuation that they're seeking.
Yeah.
Right. And so the idea that that everybody's going to get their cash right at exit, is sometimes happens, but it's tougher depending upon sort of the nut that somebody wants at the end of the day. And it's hard. It's been something I've been working on. How do I articulate that? Because that's my thing. It's additive, right? Like if it's all cash, it's this. If it's something else, if you want to get a higher price, then I can offer you a structure that gets you there. And then there's obviously been conversations, and I just had one yesterday where, I was very, very candid with somebody. It's a conversation that I reignited after maybe a year and a half. We'd talked, it wasn't the right fit for me at the time because of what they were looking for. And we had a quick chat. I picked up the phone. I called 3 different people that I know who are very deeply embedded in the industry. Some of them my investors, some is a friend of mine. And I came back and I realized, listen, if you can sell your business at that price, I was very candid. I said, if you can sell your business at that price, go do it right now. I would sell your business all day at that price if I was in a position to. And here are the 3 reasons. And they boiled down to the dynamics of the industry, the competitive sort of nature of what's going on, and ultimately the distinction between sort of what you perceive your business to be and what it actually is. But ultimately, it was really productive because he knew what he wanted. I thought about how could I, from a structure perspective, get there, realize that even with structure, I couldn't get there. And it was an opportunity to build a great business relationship. So,
yeah, I think it's something that, if a business owner has a valuation number that's set in their mind and that's what they need.
Yes.
Then, the conversation is kind of like you talked about. Here's where I could be at all cash. By a prudent use of debt, I could increase that price to here.
Mm-hmm.
If I put more debt in the business, it puts the business at risk. And that's not something that I feel is a responsible way to run a company. And so my conscience won't let me go beyond that, because I'm not going to put the jobs of the employees at risk. And so, if the number's here and we can only make it to here, then it's an amicable parting from my side. Yeah. And if down the road the business has grown to a point where we can then pay that price, that's great. Or if they can find somebody else that has a different structure that works for them for their risk tolerance, I think that's great too. It's like what you told the owner. If you can find somebody to pay that 100%, if the dollar amount is the only thing you're looking for, go do it.
Yeah.
But there's some other things that you need to think about, that how it's going to affect the business, and just make sure you understand what that's going to do to the business going forward, and make sure you're comfortable with that.
And ask the hard questions. I love getting put on the spot when it comes to that sort of stuff, because it's so important. It would be to me, and I think that it is the beauty of some of these conversations. I just get absolutely worked, and and I love it.
You get worried when you don't.
Yes. Yes. Yeah. I had this conversation twice this week. I mean, again, folks I was kind of circling back with, and they're like, listen, things are great. I don't want to sell my business now. And it's actually an interesting point, is that like that's when you want to sell your business. It's your business is more attractive to the other stakeholders, whether it be the investors, but also a lender as well. They want to see a nice, I got to make sure, I think my screen is mirrored, so it depends. You want to see, like, you want to see a pattern like this. The lenders want to see that pattern. And I don't mean this in a negative way, but there are definitely situations where I've had a conversation with a business owner and my feeling was something's amiss here. And it's not just that they're tired, like something doesn't check. There's an asymmetry of information. They know everything about the industry and the business. And this might be a game of hot potato.
Yeah. And, you know, when I think about structuring, you know, if I'm giving an LOI to a potential business owner, a letter of intent, which if somebody doesn't know, it's, you know, it's a written document where you've kind of highlighted, here's the price, here's how the structure is made up, and what each piece would be. It's not something you're committed to, but it's a way to say, you both sign it and you say, hey, we're going to work towards closing on these terms. There's some stuff that still needs to be negotiated, but you know, the way I like to work is I'm trying to explain as much as I can about each piece of that structure and what it's going to mean today, what it's going to mean a year from now, what it's going to mean 10 years from now, what it's going to mean, you know, through the life of the company, and really working to transmit, you know, here's how I interpret this. Here's my understanding of your goals. Here's how I think each one of these terms is going to affect that. And you know, the equity piece and whether it's pari passu is a huge piece of that. And you know, whether they're, like you're saying, they're along for the exact same ride as everybody else or not.
100%. Awesome. Let's transition.
Okay.
I went through your LinkedIn, Ryan. Damn you pretty on paper. Listen, you came out of college, you go to Deutsche Bank, Jeffries. This is all after your family stuff. You're a petroleum economist, Palm Tree, right? And then of course into the dental stuff. You did work with some other guys in our industry who had acquired a business that do some really interesting, build some interesting technology, and now you're doing this. I know you're more than that, and I think like I just want to showcase, like I know you're like super high integrity guy. You're motivated by purpose, right, and impact in the things that you do. We prepped a little bit for this, just for anybody who's listening, and he kind of like started casually riffing off the things that he's involved in. Big Brothers Big Sisters. He's done some work with the Special Olympics. He's involved in mentorship groups. The guy, I mean, you're just such a wholesome dude. You're a family man. So I want to celebrate that. And so the folks who get to know you, you know, ask about that, because you're more than just somebody who, you know, did the dental biz and gets excited about structuring. So keep that in mind. And if you
about what structuring offers,
what it offers. Yeah. Okay. So the other thing is it's funny. So on occasion people ask like, why the heck would you do this, Kirk? You know, and it's funny, like it was like word vomit a few times, or it's like, I honestly, like I am doing what I'm doing today because it's incredibly hard. Life is a series of adventures to me. This is one of them. And it hadn't been easy. And I think that in some ways we have this in common, although I'm not as accomplished as you when it comes to some of the things that you strive to do. So if I were to characterize you, you enjoy anguish to some degree. So like a lot of it on a bike.
Growth through self-torture.
Yes. Yeah. Okay. So what's the short laundry list of things that you've done that involved sort of whether, you know, biking or whatnot? Can you just run us through it real quick?
The uncomfortable things that have provided some character growth.
Yeah.
And, yeah. I mean, you know, at a high level, my career is really important to me, and my development there is really important to me. But you know, there's a higher there's more than just that. It's how am I affecting the world around me and the people that I'm interacting with? And so for me, it's always been about growing myself to be better, and challenging myself and pushing myself, and through that growth, trying to have a bigger impact on the world and the people around me. So the laundry list. I mean, unsupported bicycle trips across the U.S.
Okay.
Unsupported bicycle trips across Africa.
So 2 continents.
Two continents. I mean,
Right.
Africa, we did like a sideways. We went from the lowest elevation to the highest elevation.
So you didn't decide to go the shortest route. You took what could be one of the longest routes, you're saying.
I mean, like maybe not on the map, but from an elevation perspective, yes, you're starting here and you're ending. Lived on a glacier in southern Chile for like a month and a half. Dog sledding trips, relay swims between the Hawaiian Islands. Just stuff that gets me into nature, that pushes me beyond my comfort zone, but also, I have a team that I'm working with. So have tried to see how far I can push myself and grow personally, have allocated time for that in my life, but at the same time have spent 3 months living in Antigua, Guatemala, working with a Dutch children's school there. Similar thing, I spent another kind of period of my life, 3 months living in Colombia with a host family, working with the Rafael Pombo Children's Foundation. And trying to figure out, okay, with where I'm at in my career, what sort of commitment can I make and follow through on to an organization that I feel like is making a difference. And so, trying to find if I had any gaps in my kind of job progression, make sure that I was working, that it wasn't just this career 100% focus. It was let's build myself as a person so that I can have a greater impact on kind of everything that I'm doing going forward.
Awesome. Strikes me you're the sort of guy that if you say it, you mean it. I love it. I love it, man. I'm proud to consider you a friend. All right, final question, getting away from the personal stuff. If you had sort of 1 or 2 pieces of advice that you're going to give to a business owner, right, in order to help their business be more saleable.
Yeah,
quick lightning round.
Lightning round.
Yeah. 2 things. What can you do to help improve the saleability of your business?
Yeah, I think at a high level, and it's obvious, but can sometimes get lost in the shuffle. It's just knowing your numbers and having them laid out in a way that logically makes sense. Like, here's the summarized version, here's the detailed version, here's how they connect.
Okay.
And when somebody's asking you a question, you've looked at it, you know the answer. I think that's kind of 1.
Okay.
And I think 2 is, after you've done that, you're going to see some blips in there. And you as the business owner are going to understand, oh, well, that's not an issue because we fixed that, or that was a one-off thing. But someone who's coming in from the outside to look at that, they're not going to have that same level of knowledge. And so if you can either show how you've already alleviated it, or just notate on whatever you're sharing with them that here's what happened and here's why it's not an issue, that just puts you, I think, heads and tails above other business owners. Because when somebody hands me something and I can follow the patterns and the trajectory makes sense, and any blip, there's already an answer for it there. It's like, wow, this business owner is on top of what's going on in their business. And it just moves the relationship that much far forward from a trust perspective.
Perfect. I love that. I love that. And I would say you speak about it in terms of, say, some of the blips, but I would also say as well is, if you are the sort of business owner who is continuing to invest in your company, which we would prefer to see, right? As we look at it, if you are continuing to invest in your company, And I had an interesting conversation with a friend the other day. He's like, if I do this, it's it's going to cost me $50,000 in EBITDA. And if I apply a multiple to that, that's money I don't get in my pocket. And it's this reductive sort of mindset, when the reality is, if you make those investments and then drive and have attribution on them, understanding what the results were from them and be able to actually express that, it goes to, one, building trust, showing that you know your numbers, but also helps us understand, cool, that works. Maybe we can do more of it, or maybe it didn't work, and that's okay. That's really okay, because it helps us understand the health of the business and kind of carry things forward. Very cool. All right, Ryan, if somebody's really excited to meet you, how do they get in touch?
Yeah, I mean, I think the easiest way is to send me an email at ryan@newendurancecapital.com. And they can hit me on my website as well. It's the same thing, www.newendurancecapital.com. And look forward to having conversations.
Awesome. Well, this is great. I'm glad you made the time. I'm glad that we can keep it casual with friends and family in the background. Me giving everybody a view of my hanging clothes. Let's do this again soon, and enjoy Austin. Stay warm.
Yeah, for sure. And I was expecting my 4-year-old to explode onto the scene with some sort of dance move any moment, but I think we missed that window.
We avoided that. Had we known, we should have scripted it. Why didn't we? Next time. You're the man. Thank you, Ryan. We'll catch you soon.
Thanks, Kirk. Great chatting with you.